Morning, everybody. Welcome to Fractal Effects live stream. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Please make sure you read the disclaimer. Also check us out on fractaleffects.com, where we teach algorithmic trading. Now let's jump onto the charts. My apologies. My charts have reset. So we have FOMC tomorrow. So the market can be a little erratic, but we only had one news drop today at 8:30. We have a slight upside expansion model happening. On NAS, that's NAS on the left, US 500 on the right. We are currently above the New York fair value gap. London had a late retracement, so we had a bullish confirmation, retracement back into the EMAs, and an extension which came a little late though. So even if you're trading London, you might not have caught that within the first hour. So we're getting a lot of consolidation here. No confirmation yet. So US 500 has already taken out New York opening highs, set here, whereas NAS is not. So US 500 is the stronger one right now. But we are also seeing a TDI divergence. So this thing could drop. We're just waiting for a confirmation. We're above the 238, so we're still bullish. We have a green box. But when you see this much consolidation happening, we could get a manipulation move. So it might spike up and then deliver down, or it could spike down and deliver up. That's why it's always important to wait for confirmation. So tomorrow, because of FOMC, we'll see what usually we completely avoid indices or any assets attached to the US dollar. Even oil might see some fluctuations, but we'll take a look at it. For nothing else, just for educational purposes. So since we've already had a retracement back to the EMAs and close to the New York opening gap, when we finally do get confirmation, it might move quick. Same thing with US 500. Right now there's been no change in delivery. We are still bullish. In order for us to even see some bearish signs, we need to take out these lows. Now we're back at the New York fair value gap. US 500 also getting back to the New York fair value gap. Past the 20, slowly making its way down to the 50. On NAS, we're already under both the 20 and the 50. We might get a crossover. Let's see what happens. Either we reject, push up from here, or it could continue down. This could be the manipulation move as well. We're seeing an advanced entry here. One of the advanced concepts taught in the back end, in the Learning Hub, Power of 3. So this could be the manipulation move down. We've taken out these lows formed during this consolidation. Now let's see if it wants to push down or push up from here. Getting some good movement from there. Now if we don't take the highs in the next few candles, then that divergence will most likely stick. They most likely paused NAS so they could gather more liquidity for US 500, and then they might both push down. Otherwise, I want to see it take these highs, even if it doesn't give us confirmation. Then we might see a little bit of a retracement. Right now, we're just patiently watching. Or if you're not in a trade setup by at least 11:30 New York Standard Time, New York Eastern Standard, then we will most likely pass on the day. Our goal is to find a high probability setup 1 hour after the range is formed. We do not want to sit here watching this all day, regardless of what session you're trading. That's why I said we most likely would have missed London, even though we have a bullish confirmation. The retracement came way too late. And then for the Asian session, we had a bearish confirmation, slight retracement here, push, not too big of a move, but then eventually we moved up. So now we have a upside expansion model. Again, we're above the 238. We are still bullish. Green box. And we just bounced off the New York fair value gap. I want to see it take these highs and then give us a bullish confirmation. Otherwise, if it fails to do so, then it might just push down, in which case NAS would be the weaker one of the two. Right now, US 500 is stronger. US 500 above that fair value gap as well right now. Still just patiently waiting. Slowly pushing up. We are still bullish. So NAS took out all these stops, punishing anybody who went in long here, engineering liquidity on both sides. There are people that were shorting from up here after seeing all this rejection. Now let's see if we can't get that bullish confirmation. US 500 paused, possibly waiting for NAS to take those highs now. Let's see if this bullish confirmation sticks. US 500 as well, taking out all those highs. Now, since we've already had an early retracement, this will be moving most likely quick. So this becomes our fair value gap of interest. I'd like to see that 20 EMA get up there if it can. If not, I want to see if this fair value gap sticks, and I want to see how price reacts here at the consequence encroachment, the midpoint of that fair value gap. So we do have highs up here. I want to see a retracement before it takes those out. Make sure your standard deviations are turned on. So a little over 1 standard deviation. And again, that's not a coincidence. That is kind of our low-hanging fruit objective, 1 standard deviation. So we want to make sure that we get our retracement before it gets up here. Now this is all algorithmic data based off of the aggregate that's on the dashboard of Fractal Effects. We have 20 years of aggregate that shows you how this algorithm is going to move. Remember, nothing is 100%, but combining that aggregate with our indicator and the specific rules we've set in place, we try to get up to 70% or higher probability of getting the direction correct. One minute, 20 seconds left. I want to see this candle close. I want this confirmation to stick. Then I want to see a retracement back in here. Hopefully the 20 EMA meets us. Maybe it'll wick it. We don't want to see price get below this low. Forty seconds left. Okay, so we have our confirmation. Now here comes the retracement. Again, we do not want to see it get below this. We want to see it come into this fair value gap as the 20 slowly enters it. We're not that interested in potentially touching the 20 again since we've already had a retracement. So the only fair value gap that's been created so far is down here for US 500. This one is not fully formed yet. We have 4 minutes left. Let's see if that sticks. There we go. Let's see if we can't get a fast move today. I want to see it bounce off the midpoint, consequence encroachment, touch this 20, maybe wick it. And we want to stay above here. If we're bullish, it should not need to come back down here. We've already taken out these lows. We've bounced off the New York fair value gap. So whatever we're going to see should happen right here. Market slow, driving down. We're at that fair value gap now. I want to see it touch the middle. It doesn't have to, but again, our probabilities are increased. The more PD arrays it touches, the midpoint of this fair value gap, this 20 EMA, the higher our probabilities are. Now we've already reached 0.5 standard deviations. Again, this thing is pushing up, extremely bullish. So the retracement might not be too deep, but I want to see at least come here. I'd like to see the 20 at least touch the fair value gap. Excuse me. 7 minutes away from 11 o'clock. Now we did retrace back into the dealing range right here, marked out by the gray line. For our subscribers, make sure you watch all the videos in the Learning Hub so you understand each component of this indicator, spotlight indicator. Might look a little messy, but each one of these is connected to a specific PD array. We tried to make it as easy as possible, almost a paint by numbers. Again, for anybody who's not familiar with the strategy, we wait for the range to be broken, confirmation, candle close over the range, a retracement back into the range, and then we look for our setup. Still waiting for that midpoint to be hit, and even maybe possibly wick that 20 EMA. But mostly, I'm looking to see what happens right here. And again, if it takes off without us, that's fine. Never try to catch a runaway train. This is the station. If it doesn't come into our station, then we're fine. We'll catch it tomorrow. Catch the next one. We're getting that movement now. Close to that consequence encroachment now. Not too far from the 20. Okay, we've hit the midpoint. Now let's see if it also goes a little lower and hits that 20. If not, we're okay. Remember, it's not as simple as that. Too many people just jump in because it hits the midpoint. We're watching this market on multiple time frames. We're waiting for reaction. Watching it on the 15, the 5, the 1. There we go. We hit that 20. Still waiting. Now I want to see a reaction on smaller time frames. Remember, this indicator paints everything you need to see on every time frame. Look on the 1 minute. What's that? That's London's fair value gap. Actually, sorry, that's New York's fair value gap extended through. But I'm sure there's also London in there as well. No, I guess London's a little lower. So we're now bouncing off of that. Still waiting for reaction. Look, we're getting a deeper retracement. Again, if we break past this, which it shouldn't if we're bullish, then our bias changes. Usually we don't get this deep of a retracement after we've already had one, but it might want to touch that 50, push up. Still no entry yet. Remember, stay patient. Getting close to hit that 50. Okay, we've hit that 50. I don't want to see this close below this 50 or take this out. There you go. Now our bias has changed. See, simple as that. This is why you wait. Could this thing still push up? It could. But again, it should not need to sweep that. But we'll see what happens here and see if it gives us an entry. Still nothing on the smaller time frames. Five seconds left. Still patiently waiting. Usually we don't get a second retracement, a deeper retracement. So now we're actually just waiting to see if it keeps pushing down. Remember, it has not given us any entry yet. Make sure you're familiar with the full strategy. These are just points of confluence that we wait for. Fair value gap, 20 EMA, 50 EMA, New York opening gap. We use them all together. We're still above the 238, so we are still bullish. We have a green box, green confirmation, bullish confirmation. This is a deep retracement. We're getting some rejection. Still nothing on the smaller time frame. Could it push up from here? It could. But again, still nothing. On the 1 minute, we do not even have a fair value gap yet. Okay. Now we're getting some movement. $30 left for the 1 minute candle to close. Let's see if it gives us any kind of entry. Remember, we are high probability traders. Anytime we see a second retracement to take out the lows that have already been set, the probabilities do decrease, so we want to make sure all the points of confluence are there now before we enter anything. We're still within the parameters. I want to see if this fair value gap sticks. Got 40 seconds left. Sixteen seconds. Three, two, one. So we have a fair value gap. Now I want to see rejection and engulfing. So far, no rejection. 25 seconds left. If this closes below, then our fair value gap is moot. 1. Let's see this next candle in golf. Previous one. For any possible entry. We are bouncing off the 238 on the 1 minute and off the 50. So now we're below these EMAs. I want to see this. I want to get above this EMA. And then get on the other side of this fair value gap first. Otherwise, I could continue to just push down. We're still inside the New York fair value gap. Still on the other side of that consequence encroachment. I want to see a candle close above this fair value gap and then use the midpoint to push up. Otherwise, this thing could just crash. I don't like to be this much below the 50 EMA, especially again after we've already swept. But tomorrow is FOMC, so they are trying to create a lot of liquidity, which will be swept tomorrow. Okay, so we have 2 minutes left in this candle. We are slowly getting above that fair value gap. We're still within the golden zone, 61%, 71%. One minute left. Back at that 50, I want to see if it rejects or if it closes here. And we will possibly use this midpoint to push up. And this is what saves us. Again, stops us from getting in here, here. 34 seconds left at the 50. So we have 1 rejection, 2 rejection, 3 rejection. This would be an entry point with stops, tight stops, right below here. So if you're following along with us in a demo account, and only a demo account, now that we've closed above it, I want to see price tap this. Doesn't necessarily have to. But since we've had a lot of manipulation, we're aiming just for the top of the range. That's 3. Actually, sorry. My apologies. These tools start moving much slower once we're in a live stream. Just a little under. See where 2 is. The goal is to be in a safe trade as quickly as possible. So again, just from the way the market's been behaving, as soon as we hit the top of the dealing range, stops should move to break even. You should take some off the table. And then you can actually let it roll to 3. Just above here. Roughly there. We do want to see this thing start moving though. We do have a fair value gap here. This one's been violated. But we do have a fair value gap right here, which it could also use to push down. So we want to see it actually push through this as quickly as possible. We do also want to take a fib from the other side. Remember, they use those golden zones to fool you. So this is between 61 and 71%. This is where they're going to start gesticulating, possibly. That's why as soon as we hit to that top of the dealing range, that aqua line, we want to make sure we roll our stops to break even. 71. As soon as we hit 71%, move your stops to break even, just in case this thing comes crashing down on you. That way at least you're in a safe trade. Right now we're already in profit, but we want to make sure this is where we take a little off the table and move our stops. We don't want to spend too much time in this fair value gap. Just got to make it up to 71%. And just like before, Market should not need to come back down there, but if it turtles again, takes those out, then clearly they're just creating more liquidity and possibly even planning on pushing down. That's why we want to move our stops as quickly as possible. 71%. Make sure you're familiar with these tools. You can just watch a TradingView tutorial on YouTube. We don't actually have one. There's more than a few on YouTube that have done it very, very well. We want to see it push, but we will see some gesticulation here just because we're back in the golden zone of this arm, of this leg. Almost at break even. As soon as it hits 71. We're at 11:15, 11:17 actually. Or the longer it stays here, if we get one more candle that does not push past this, I would even move stops to break even at that point. We do not want to spend too much time in this fair value gap. Two minutes left in this candle close. You might want to use this to dip back down in here and then push up. But again, we do not want to see it come all the way back down here. We don't want to spend too much time. 1 minute 33 seconds. If we do not clear this fair value gap in this candle, we will be moving our stops to break even. We're still on the other side of that consequence encroachment. That's a good sign. On a smaller time frame, we're above the 1 minute New York fair value gap. "46 seconds. We want to see this thing push through. So either way, either this candle pushes through to 71% and you put it to break even, or this candle closes here and we still move our stops to break even, just because it could push back down. Four, three, two, one. Again, just to be safe, we're moving our stops to break even. You should be in profit. You can actually take some off the table here if you'd like. Otherwise, you could hold the rest. But we do not want to spend too much time in this fair value gap. It could use this 61% to push down, give us a false move right into this fair value gap, and then push back up, or it could use this 61% to continue pushing down. I'd like to see this fair value gap, at least the bottom of it, not trade into. So that's already covered it. There you go. Stopped us out at break even. Again, the probabilities are low now. It could still push up, but the fact that it needed to dip down this many times, and it's just because we're ahead of FOMC. So hopefully you took some off the table up here. Again, we could still continue up. It's just with this much gesticulation, you're seeing a lot of what's called seek and destroy, which happens ahead of any big news drivers. So they're just picking up liquidity. We could even maybe take this low out and continue back up, but I wanted to see us just push through this fair value gap. Let's just see where this move goes. We got about 8 minutes left in the stream. We're still above the 50. 2 minutes left in this candle close. Again, if we take out these lows, it was going to continue down anyways. Back at the New York Fair Value Gap again. Should not have to keep pushing back down if this thing wants to go up. Otherwise, it's just manipulation. They're just gathering more liquidity. About 7 minutes left. I want to see what happens in this zone if we push past this fair value gap or if we push down. US 500, also still above the 50. Eighteen seconds left. So we closed above the 50. Let's see what happens here. Back at the fair value gap. Ahead of FOMC, you want to be as careful as possible. You don't want to take any chances. In a high probability trade, we would not have swept this low. We should have pushed past this fair value gap a lot quicker. And we should have stayed on the other side of that fair value gap. Right now we're taking another swipe down. Four minutes left. Let's see if we get some movement from here, one way or the other. We're back at that fair value gap on US 500, just above the New York Open. Now still driving down. About 3 minutes left in the stream. I want to see if we push past that zone. One minute 53 seconds left. Let's see if we close above the 50 or below it and continue to push down. Remember, the second it takes this low out, it will most likely either push down to the 238 and then do a bounce, or it'll just continue down. Either way, we're not interested at that point. We're back at the New York Fair Value Gap. This was a bit of a sloppy day, back and forth. All this consolidation. Closing in at 11:30 now. We're still at the New York Fair Value Gap. No real movement. Seven seconds left. Pushing it even deeper. Again, the second we take out that low, this thing is most likely going to push down. See if this holds. This is what you don't want to see regardless. In a high probability trade, should not keep coming back to the same zones. And again, we have FOMC tomorrow. One of the most chaotic news drivers. So we had one break even, hopefully some profit. And that's most likely where we will conclude the session. Make sure you check us out on fractaleffects.com. Hit the subscribe button, turn on your notifications so you know when we're live. We're live Tuesday, Wednesdays, and Thursdays for the time being. We will be moving the live stream to the back-end dashboard going into the next month. Have a great rest of the day, and we'll see you